So we got something special lined up for you today. We do this every single year, but really want to know what's working right now. The market changes obviously every single year, every single quarter, and we want to know what's been working out there right now. And so we've got a treat here. We have our top mentors from our Dealmaker Mentoring Program here on the show, and each of them are seasoned investors who are going to share what's working right now for them and their students. We're going to talk about real deals, real strategies, real results, everything you're going to need to tackle today's market. Let's do this. Hey, Jonathan, Paula, and Philippe, welcome to the show today.
Thank you for having us.
Thanks, Michael. Glad to be here.
Thank you, Michael.
Yeah,
Excited to be here.
Yeah, we try to do this once a year, right? Because almost every year is the same in the sense that people are always telling us, oh, you can't do deals. It's too hard to do deals. You can't find deals. The market's too hot. Oh, no, wait, now it's too cold because there's COVID. Oh, can't find loans. Can't raise money. And so we have this episode where we kind of talk about, what is in fact going on in a market, what's working right now and what's not. You guys are working with so many different students. In addition to doing your own deals, you also see what your students are going through and kind of what their struggles are. So we want to kind of shine a light on that. And the market does shift, even though the theme is the same every single year. The nuances and the details do actually shift from time to time. So I'm going to start with each of you and kind of and talk about kind of what the market is like right now, and compared to maybe where it was a year or two ago. Keep it somewhat brief, but I do want to because a lot of people they want to wait. They're trying to time the market and try to get into the market at the right time. And how would you address that?
Yeah, well, I have some great news. If you're trying to time the market, now's a great time. So, I know that
we time the market.
we've all always debated about investing during all periods of the cycle. I think everyone here invests all throughout the real estate cycle. We're just looking for maybe different deal characteristics. But right now, we see anywhere from 20-30% off of top of market value, just depending on your market and the specific asset you're looking at, from what you would have 24 to 36 months ago. Additionally, as a buyer, which is kind of what we're focusing on this podcast, there's not as much competition as what there was 2 to 3 years ago. So, one example is you would put an offer on a deal 2-3 years ago, and if you weren't at or above the whisper price, the broker would probably blacklist you. Whereas today, you can put in offers that actually make sense, even if it's below what the whisper is. And obviously, many times they may not accept them, but it's not frowned upon in any way. And people are getting deals done by landing great deals at price points that make sense from them. So in terms of finding deals, I actually think now's perfect time if you want to time the market.
Yeah. Which you should. If you were to try that. Now, Paula, what would you add to that?
Yeah, no, I think that I would just echo that. I feel like each phase in the economic cycle has its own tailwinds and headwinds. And I think that you, as an investor, it is your responsibility to really be that strategic leader, to find opportunities and decide, am I going to be a buyer? Am I going to be a seller? Am I going to buy this size, this location? What is going to be my strategy? Is it going to be value add? Is it going to be increasing rents? You create your strategy to add value to your investors and to your deal. And so I think that just to echo Jonathan's, I think there is always going to be a point in the economic cycle for you to be able to tailor your strategy to become more effective and hopefully profitable.
Yeah, and I think that's a good point, Paula, is to really tailor your strategy and your tactics. I mean, your underwriting changes every single quarter right now, or loan to value is much lower, interest rates higher. You just work it into the underwriting. It's not going to be the same as it was a year ago or 2 years ago. And so you have to adjust your tactics a little bit, which is why working with people, like with you and our mentors is so pivotal, because you're in the market yourself. You actually see what's going on, not only from your own investing, but also from all of your students investing as well. Philippe, what about you? What's your outlook regarding the market right now?
Yeah, my outlook is very positive as well. I think it's there's still a shortage of multifamily housing units nationwide, for various reasons, but mostly like the higher interest rates, makes it less affordable for people to build new housing, new families, and therefore buying houses or starting on their own. A lot of people they still live with their family because it's so expensive out there. So there's high demand for affordable housing, which is, that's where we thrive in. It's doing the value add for these properties. That's really the area that we have most of our deals in, like all of us. And from that standpoint, even though there's been a lot of supply coming to the market, there are a lot of cities that are absorbing the supply very, very quickly. Just because based on the number of people on immigration to these cities. So that's really the areas that you should focus on. And one thing I'd like to mention as well, if people are interested to dig a little more, Yardi Matrix, which is a data aggregator for multifamily, they put out a webinar recently on their outlook on the multifamily market, and they are very, very bullish. I was surprised, but it's very interesting webinar. I invite you to watch it.
Yeah, it's a good point. There's a lot of really good reports out. Yardi Matrix is one of them. Marcus and Millichap puts out excellent reports. So if you read up on the U.S. national market or even regional markets, it's a great resource. And I do agree. I think we still continue having an affordable housing shortage, depending on which report you look, is between 3 and 5 million. And now with Trump getting into the presidency, there's concern about mass deportations and tariffs. And there's an article in the Wall Street Journal about this literally today, about that may likely drive up costs further drive up the cost of housing. So again, you can't build more affordable housing, which is typically what we're investing in, Class B, Class C housing as well. So let's shift a little bit here to kind of what's working and what's not. I'd like to maybe talk about an example or two of students who are doing deals. First of all, are students still doing deals? And maybe you can talk about one or two of them, and we can kind of just see how that came about, how they found it, maybe how they raised capital for it, how they maybe partnered with other people.
Yeah, I have a good example I can share. One of my students, her name is Masha, and she partnered actually with two other students, and they ended up buying a 50-unit property in Florida. And it was a very interesting deal. I helped them underwrite the deal, like check that the numbers were adding up, and we looked at the market, we looked at all the parameters together to make sure that the deal was making sense. And I was a little bit concerned on the market size, but eventually they convinced me because they had a very strong case. The location was such. It was in the middle of major highways. And, additionally, what was very interesting on that deal is that the rent targets that they were projecting, they were achieving those targets already on some of the units. So it was self-comping. So it was really like a good opportunity that they found. And finally, the last piece of the puzzle, they were able to negotiate seller financing, which simplified and shortened quite a bit the process of acquiring the property. And as we always do, I think they're projecting like a 2x return. So it was very, very decent. And we worked together. I assisted them when they started to raise capital and so on. And they were successful. And they found, within their friends and their family, they were able to acquire that deal. So, it was a very successful story.
And you mentioned about partnering, and is this a common theme for syndications, or at least in our ecosystem, that people partner with each other, or is it a little unusual? And if so, why are people partnering?
Yeah, it's very common. I think I cannot think about any student who did their first deal and by themselves. There's always a dimension of partnering. And actually we even have one of my pretty successful student, Chad, in the Indiana market, several years ago he did his first syndication, and now he's opened his doors to other students to raise to partner with him and work on contributing to raising money and other tasks on doing these deals together. So it's very, very interesting stories. Partnership is a very strong strong parameter and dimension of making deals.
Yeah. Jonathan and Paula, any stories from your students, maybe even deals that you talked your students out of? It is all about doing deals, of course, but it's also about avoiding the big mistakes that kind of put you out of business. Any stories that come in mind from you?
I would say like just a high level story that I feel like I have with conversations that I have with every student. I believe, and Philippe alluded to that when it comes to his current student closing that deal in a smaller market in Florida. I think when you start in real estate, you think of the big shiny markets, right? Miami, Denver, Austin, Dallas. And what you will see when you start looking at market specific data is that some of these tertiary markets are actually thriving, while Dallas and Austin, like they have declining rents. And so I think that the conversation that I have with students is always being able to focus maybe on two markets, maybe a primary market and maybe a secondary, tertiary, where they can be the bigger fish in the pond. And so I feel like we always have that conversation because sometimes this smaller markets could be that really great opportunity for you. And so just for those listening, that could be a great thing to look at if you have not yet.
Yeah, and I think probably the one thing I would reiterate is just the whole power of partnership conversation. Like Philippe, I don't see anyone doing deals on their own. I think all of us in this industry have that are successful have recognized that you need partners in order to buy deals, in order to scale, in order to do a good job at running deals, et cetera. But I would say now it's pretty much impossible for students to go out and do a sizable deal just by themselves. You need people to help, whether it's, raising money or someone's focusing on finding deal or someone's focusing on asset management. Just while the opportunity is there in the market today, there is a lot of work that goes behind it. And so it just functions better in a team environment.
Yeah, absolutely. I think that was one of the biggest hangups I had when transitioning from the single family to multifamily space is the whole nature of partnering and joint ventures. Like if you want to scale, you can't really scale by yourself. And so like you said, I think partnering is a key component, which is why it's very important that when you get started with multifamily, that you connect to the right network, that you have access to capital and deal flow as well. In our world, we connect the two of them, right? So if you're a deal finder, you'll be connected with 30 capital raisers, and if you're a capital raiser, you'll be connected with 30 deal finders, so that we can accelerate that networking as well. Let's talk about some of the challenges that you're seeing with your students. Philippe, what are some of your top challenges? And maybe we'll get to Paul and Jonathan, and we'll kind of drill down on each of those and see, okay, how are you dealing with each of those?
I think like currently one of the challenges, I think and I think it's true for everyone in the market. It applies for very experienced operators as well as people who are beginning. Is there's still an expectation by sellers, for prices that were experienced, 2-3 years ago. And that's why, there's always like a 20 to 30% difference. They want to stay in that time frame, but that's not the reality right now because interest rates are much higher. So, there are still, a number of deals that are hitting the markets or whether on market or off market, but, an expectation, at least from sellers, at price levels that are much, much higher than what the properties are worth. And especially, worth in when you consider doing the value add piece, and generating returns for your investors. So, I think that's the biggest challenge. You're going to have to underwrite, probably hundreds of deals to find one that is going to work, and then then you can make an offer on that deal. But I always recommend to students to submit LOIs, letter of intents, even if they are much lower than the asking, just to show that they are committed to have the interaction with the brokers and just continue to get some deal flow.
Yeah. So deal flow is a challenge, and interestingly, that's always a challenge, right? Because now we have this bid-ask spread, this gap between what sellers want and buyers want, and then before it was COVID, then it was a hot market, right? It's always a challenge. So we'll talk about deal flow in a second because it keeps popping up. It just has different flavors thereof. Jonathan, Paula, anything from what you're seeing here, what students are struggling with?
I would say capital raising. I feel like that's the other side of the coin, right? You find the deal, but you need the money to fund it. And as Philippe said, it's not only the new students, but it's everyone in the industry. Although there is a lot of like dry powder on the sidelines waiting, it's still very, I would say, challenging to source that capital that's ready to invest. I would say now as the market is shifting and people are becoming more confident in the market, we'll see hopefully a change in that. But being able to raise sufficient capital to close your deal on time, I feel like it's something that my students and I would say a lot of people in the industry are challenged by.
Cool. All right, let's talk about deal flow real quick, and I'd like to hear from all of you. Deal flow and capital raising. I mean, those are the two main challenges. How are your students successfully getting deal flow? And obviously, deal flow is required to actually get a deal. If you don't have a deal flow at all, then you're never going to do a deal. So having a shot at getting a deal done, you need deal flow. So what are you teaching? What are you making your students do to get deal flow?
Yeah, I'll take that. I'll start with that one. So, first and foremost, underwriting deals. It sounds so obvious, but you have to sit down, do the work, underwriting multiple deals a week. In terms of deals coming into that funnel, so you can underwrite them, I feel like that's one thing that's really changed across the course of this year. So, in the opening part of this year, you would call brokers, and it was somewhat crickets. There weren't a lot of people selling deals. I would say my experience is that has changed drastically this year. I wouldn't say there's a flood of deals on the market, but there are plenty of deals to look at if you know all the brokers in like a given sizable market and interact with them on a regular basis. Some on market, some off market. But I think the deal flow is something that's actually changed a lot for the better across the course of this year. And so, when students ask me about increasing their deal flow, the first thing is just, is your market or markets big enough to source those deals, right? And then do you know all the brokers in that market? I had a student the other day I was talking to, and that was his problem. And he was looking in the Austin, San Antonio market, which I can guarantee you there's plenty of deals there. And, we just went through a list of brokers that I'm aware of in that market in about a 10-minute time span, and probably identified another 15 deals to look at in that 10 minutes that he wasn't even aware of.
Yeah.
And so I think that's the thing, being aware of all the brokers and then actually doing the work to underwrite. And then to Philippe's point, putting in an offer that makes sense. People are not offended by what previously would have been perceived as low ball offers today. And so find the number that works and turn it in.
Paula, how are people finding brokers, and how are they speaking to them, right? Because one of the concerns always is, hey, they're not going to take me seriously. I've never done this before. Like, what are your students doing there?
Yeah, kind of what Jonathan mentioned. I feel like a few years back, it was very difficult, right? To talk to a new broker. Like you had to be the cool kid. You had to have the experience. You had to know the people before to, in a way, break into the broker's world, right? And I would say that now that has changed just because it is more difficult for them to sell deals. And so they will be willing to talk to you. They're probably willing to grab lunch with you. Obviously, do not waste their time. But I do think that brokers have changed their attitude towards newbies by basically being more open to having a conversation, having a relationship. Ultimately, what they care is that you are able to close, right? So we're going to talk a little bit more about the capital raising side. But if you are able to close and you are confident and eloquent on your numbers, and you have your team, your lender, your property management, your other partners, I think that they will be willing to sit with you and talk with them. How you find them, there is multiple ways. Honestly, you can do as quickly as a Google search, as ChatGPT. Just ask all brokers in the Austin, San Antonio area, and then go to their website, get their names, go meet with people. You probably also have a mentor. You also have friends in the area that probably have closed deals. Have a conversation with them, see who they work with, see who they like to work with, and go meet them. Also go to meetups. Many of these brokerages have meetups and have different events. Go and show up to events, conferences, and get to meet with them. Because I would say that now it's that time for you to start that conversation, start that relationship, because they have the time today. Now, a year from now, they may not have the time to meet with you because they may be selling a ton of deals. And so I would say this is a particular time in the cycle where you should be able to break into the brokerage network.
That's awesome. Philip, any other thoughts on deal flow?
Yeah, I have an example actually that shows the power of consistency. working with brokers. And I think, before I dig into that, the idea there is you want to maintain, follow up with them regularly. And, even sometimes you don't hear from them in a while, just follow up, just try to stay top of mind, because, sometimes, and it's not, sometimes, they could be overwhelmed talking to too many people at once and so on. And you just have to remind them. So, by the way, we spoke about this. I made an offer on that deal. Is there something new that you have received? And just the fact of following up with them and keeping that fresh, that relationship fresh, can help, generate some deal flow. And each time I talk to students about that, they say, oh yeah, I followed up, with some brokers recently, and I received like five deals of market. That's really fantastic. And the example I have in mind is, I have a set of students who've worked regularly with this broker and submitted LOIs, reviewed deals, etc. They were invited, and they have no deal under their belt, but they were invited and selected to be part of a group of 13 potential buyers for 100% of market deal, actually, because they build that relationship, that trust with the broker. So that was remarkable, to see that they were taken very seriously by the broker by staying engaged, and they were invited in a real, off market bid opportunity.
And this is really a secret. I mean, a lot of activity happens in the off market or semi off market space, and building relationship with brokers is how you get to that. And it doesn't take years, thankfully. It takes maybe a few months or so, where you get like this, invited into this inner circle of buyers, even if you've never done a deal before. But Paula, you said something earlier. When you talk to brokers, they want to make sure you can close. So let's talk about the capital raising side of things. How are your students raising capital right now? What's working there?
Yeah, I think that for me, if you are starting, right, and I talk with my students, there's kind of different circles of influence that you have. And I would say on your first deal, most likely, if you're thinking of closing in the next 6 months to a year, you already have a circle of influence that already trust you, that already know you. So really starting to be, you have to become that SME, right, the subject matter expert when it comes to multifamily, and start talking about it with your friends, with your family, with your employer, with your coworkers, with the people that you play golf with. You have to become, in a way, change your identity to be the real estate investor that you are now, and share that with your circle of influence. That's how Jonathan and I really raised our first multiple millions, was just through, direct inner circle. Now, when it comes to building a platform and becoming in a way, an influencer on social media, LinkedIn, as well as any other platforms like nonprofits or any other platforms of influence you have, I would say sometimes that's really effective, but it may take a little while. So I always encourage my students to start that now, because it's like a snowball effect. It may take longer time. No one's gonna write, most likely this person that just saw you on Instagram is not gonna write you a 100K check if they don't know you and you haven't built that rapport through multiple posts, through that constant touch point. And so I would say those are kind of the two sources of investors that I see.
That's a good point. A lot of people feel that raising money online is the easy button. And there's actually programs out there that sell programs that show you how to raise money online, but it's putting the cart before the horse, right? So no one's going to trust you on Instagram without you having talked to other investors before. And you guys said you yourself raised $1 million, $2 million, $3 million, just one-on-one, the old-fashioned way. And so you got to start there. You got to start at kind of the fundamentals. And you said, hey, start with your circle of your inner circle, your people, your sphere of influence. And what about the argument where people say, I would say, I'm going to run out of people in my sphere of influence. What do I do then? Now I'm capped, Jonathan.
Yeah. So a couple of things there. So in regards to that question, I think that's once again where partnerships come back into play. The equity requirement for these deals is greater than what it used to be, due to lower loan values on properties and still reasonably high prices. So, if you have a higher equity requirement and investors who I would describe today are more sluggish, like it's not that people are unwilling to invest, it's just that that one-on-one time and explaining to them why now is a good time to invest is more involved than what it was maybe a couple of years ago. So partnerships are definitely useful for growing that sphere of investors, you know, that you could put into a deal. I think also another thing that's important is reaching out to anyone and everyone. A lot of times I speak with students and, you know, they've talked to the 4 friends that they think have money and want to invest. And lo and behold, 3 of them don't, 1 of them does. And they're like, I don't know where to go from here. And so that's where I recommend, hey, get on Facebook, get on LinkedIn, like talk to old, you know, network people you used to know in school or previous jobs. I think one thing that really shocked us when we first started raising, and honestly still shocks me on our raises today, is that you never really know who's going to invest for sure. There's people that, you know, you'll have on your soft commit list that you're like, man, I know that Michael's going to invest in this deal, right? And then you get right up to it and they get cold feet and they don't. But on the same coin, you know, on the other side, there's people who, if you're out there talking about it, they'll just come out of the blue and be like, hey, I'm actually really interested in this. And you basically have an investor in your pocket you didn't even know about. And so talking to anyone and everyone is also a really important thing, especially now.
Yeah, and one thing I want to add to that when you're talking to people, always get referrals from people, right? Because theoretically, if you get, for every person you talk to, you get 1 referral, you never run out of people to talk to.
Yeah.
Philippe, what's working now in raising capital?
Yeah, you know, just to add, you know, 100% agree with what has been said so far. I'd say to it helps when you scale, you know, it helps to kind of define an avatar, you know, define like who's the type of person you want to talk to, and it's easier to have that target person who can relate easily to you, right? So my background is in aerospace, so you know I'm going to be able to connect better with aerospace people, right? So you know those are the people I'm trying to target when I'm trying to expand my outreach, you know, via LinkedIn or Facebook or things of that nature, for instance. But you know, besides like, so this is like the more, I would say, like marketing driven almost approach to capital raising, which is like the next step after, you know, friends and family, your inner circle, and people who know and like and trust you well. But I would say like another path to explore is, you know, just start a meetup maybe, right? You know, because there's a number of cities. You know, I moved here to Atlanta a few years back, and you know they didn't have a multifamily meetup. So you know, I just started one with some people, you know, I met along the way, and we reached. I know in our meetup group we have about 1,000 people now. So you know, it's remarkable. You know, we plan these events, and we have people coming to these events, build new connections, and you know, I don't even have to attend other people's meetup. I just invite people to my meetup, so it's easier from a logistics standpoint. So just an idea to explore.
Yeah, I like those. I like all of these great ideas you have. And let's talk about the joint venturing a little bit, because, for example, the students that we work with, I don't know what the split is, but there's deal finders and capital raisers. We talked about that before. I don't know, it seems like anecdotally like 50-50 or 60-40. There's a good number of students who really have access to capital. All they really need is they need to know how to raise capital, how to talk to investors and things of that nature. But their strength really is raising capital, right? So if you're a deal finder, right, talk about, Jonathan or Paula, on what you advise your students if they're more of a deal finder, and regarding networking with more capital raisers, talk about what that looks like.
Yeah, I guess like just to emphasize that you have to lead by your strength. And I feel like when we first started, we were like, we're gonna do everything, you know, and each person is gonna be able to do the asset management, the raising capital, the finding the deal. And the reality is that as humans, we all have our own strengths and we all have our own weaknesses, right? And so I think finding your strength will enable you to, you know, in a way, make your process to success a little bit more efficient and effective. And so if you know that you're great at capital raising, I would say focus on that. Yes, you need to be aware and you need to be proficient on how to vet a deal, because you don't want to bring capital into a deal that doesn't make sense for your investors. But at the same time, you don't have to spend 40 hours a week underwriting deals on a spreadsheet because you are more successful at talking to investors and sharing and explaining what a deal looks like for them. And so you need to be proficient. And so I think that that's where this program is really, really helpful for those who are like, hey, I'm here to raise capital and not to underwrite. Great. You need to know and learn how to vet deals. And so that's where the program becomes really, really effective and really useful. And I would say, second of all, is building those relationships with people that are actually good at finding deals. And so you will need to vet those relationships. And as Michael said, we have a mix of both, right? And so finding those partners that are going to be able to bring you quality deals and opportunities and see how you guys mesh together. Are those, not only is the deal good, but is the partnership good? And so I would say that that's where the benefit of the program comes in, on you finding and having access to the right partners.
Yeah, and I think so, Paula kind of already hit on one important point, which is like, if you're focused more on the capital raising, you still need to know how to vet a deal. You still need to know, is this a good deal, right? But there's actually a tie going back the other way as well that I see people miss all the time. And that is, if you're great at finding deals, you still have to convince people who are able to raise money to join your deal, right? It's one person you have to find or two people you have to find, but you have to be good at, for lack of a better way to say it, selling them on your deal. And so I think sometimes people that look for deals, they tend to be more engineering types like myself, and they think, well, I don't really have to worry about that. And the truth is, you have less conversations, but you do have a couple really important ones if you want to have partners on your deal.
And to add, even just being very clear on how to stay ACC compliance as a capital raiser, and I put that in quotations, just to make sure that when you create those partnerships, that you are having other responsibilities, that you are participating in the due diligence, in the hard money, in all these other phases of the projects, just to ensure that you are actually an active partner instead of a passive partner raising capital. And so I think that that's another piece of the puzzle on how to stay compliant, depending on what role you play in the general partnership.
So parting guidance, someone watching, listening to this right now is like, surely I would love to get into the apartment investing game. Maybe you have a rental or have done some flips and you want to scale. What is your, Philippe, what is your advice to someone on how to get started in this business?
I think the number one advice is probably like be part of a community, be part of, maybe, whether it's a mentorship program or somewhere you can have access to other people to find partners and access to people who can help you, put you on the right track to, find deals, make sure that these deals, they are, worth pursuing. And then, making sure that you're successful, you're not going to make major mistakes, by the time you close the deal and be able to close on the deal. So that would be my number one recommendation.
Yeah. Paula, how about you?
I think that sometimes we emphasize a lot of value on big steps and not on the small steps. And I think that when you join a community, when you join a program, I think that you need to be ready to take those small steps. It's almost going to the gym and doing the reps, right? You go to the gym, buy a gym membership, you pay a coach, you pay that, personal trainer, but you have to show up to do the small reps. And those small reps is what's ultimately going to help you get to that, ultimate result that you want. And so focus on the small steps that will ultimately take you, and trust the process so that you are able to accomplish what you're looking for.
I think the biggest value to having a mentor and or skilled partners on your deals is that it accelerates your progress. So there's a lot of decisions you have to make along the way as an entrepreneur, as someone that's basically investing, and they're important decisions. You don't want to make the wrong ones. They can be costly. But at the same time, what most of us tend to do is we drag out that decision-making process, which then increases the amount of time it takes us to be successful. And it means that most people are just never successful. And so having someone in your corner who can help you make those decisions quickly and move to the next step is what's going to accelerate your progress and let you actually be a successful investor.
It's been awesome. Thank you for being on the show and sharing what's working now. And thanks for being here.
Yeah,
Thanks,
for having
Michael.
us.
Thank you, Michael.